Hey everybody, this is David Skarica. Hope you're all doing good. So this is stock chart of the day for it's the 23rd of January. So I think it's gonna be a little bit of a quicker one here. See, not all these are gonna be as long. Some of them will be we've done longer ones as of late. So I'm just gonna do a quick one here. So thought I'd talk about 3M because remember a few months ago I talked about 3M as a kind of the example of how financial engineering doesn't work. The 3M has brought back millions of dollars worth of shares, billions of dollars worth of shares in recent years, and the stock has performed miserably. We'll get a 10-year chart here of 3M, and you can see 3M on earnings had a miserable quarter and is down 12%. Had this little bounce late in the year, and now is taking a lot of that back. So you can see it actually peaked in 2018, 3M at $200 a share and is down over 50% in that time frame. Sometimes 3M at some point 3M will be a good, they pay a dividend. I mean, a good buy. They pay a dividend. It's a cheap stock, but I think we're not quite there yet. But it just shows you that during this whole time frame, they have literally bought back, millions and millions, if not billions of dollars worth of stock. And look what's happened to the stock. So it just shows you if you don't have organic growth, you don't have new ideas, you don't have new products, it doesn't really matter. Financial engineering cannot hide your problems. So 3M is the stock chart of the day. And we can see that, yeah, they had we'll just quickly look at it here. And then I'm going to talk about one of my sponsor companies. I guess it's not technically a sponsor company now, but it's one of the companies I own, and they are going to become a sponsor. Yeah, but you can see 3M does pay a 5% dividend. I don't know if that's going to be in in jeopardy because of the problems they're having, but you can see, yeah, 3M, the full year things, the, the weak demand. So again, it doesn't really matter if the stock, the whole thing doesn't really matter. Financial engineering doesn't matter. Engineering doesn't matter if you're going to, continue to uh, basically, see a huge uh declines in your business and the whatnot. So so I'm trying to get the balance sheet here. I don't know why it keeps sending me back. Okay, so quickly look at this, the assets of the company. I just want to show you something here. Yeah, you can see, look at this is the shares outstanding. This is what I wanted to show you. And notice that the ordinary shares outstanding have gone from 577 to 549. Treasury shares have gone up, but this shows you, and because the shares issued has not changed, this shows you they're buying back stock, right? So that, again, this is the end of 2022, but it just shows you, and you can see, look at the revenue, so that's the assets. We'll look at the revenue. Yeah, the revenue basically is unchanged, from 2000. This is the TTM is that's estimate for the last year is essentially where it was in 2000, about 32 billion. So you're buying back all this stock, you're not growing the company. That's why those shares are performing like they are. Like I said, at some point, I'm not bashing them too hard. I think it's a buy. It's paying a near 6% dividend, So, but I just think it has to move a little lower. And again, if they continue to struggle financially, that dividend then potentially is in jeopardy. So anyhow, there's 3M stock chart of the day. So then Carlisle, this is a company I participated in the private placement. I've liked it for a while. Now it's come back down around the 8.5 cent range. And the reason being is there was a big holder that just indiscriminately dumped his shares. I soaked some up that day. That was the day it traded to its low. I bought some more at 7.5 cents. So you can see that they've got this drill program. They're trying to increase the resource. So here's the program in detail, showing you the dip and the depth. They did 7 holes. This is kind of a big, deep project. It's not one of these, near surface, high grade things. It's a thing that could go down for, hundreds and hundreds of feet or meters. So they're basically doing this. I think the fact that they completed the drill program so quick is good, because that means they knew what they wanted to identify. They knew where they wanted to drill, where they wanted to expand the resource. So they'll probably have these results out, now they go back, to the lab. Takes a few months for that. So I think March to April, they'll have the results out. So obviously I'll be holding going into that. So, yep. So Carlisle, like I said, it's just kind of sitting here in its base, at that 8.5 cent area. After, unfortunately, it did have quite a nice run up, and then it kind of petered out. And then, it's kind of just sitting here right now, kind of in that same base it made over the summer. And you'll see if we go look at a shorter term chart, let's get a month-long chart just so we can see what happened with this guy. This guy dumped right here, essentially has been the low. And like I said, I bought some. I didn't get the low at 7, but I bought some at 7.5. And yeah, you can see like that day it traded almost 1.5 million. And you can see a few days later, it traded, almost 750,000. So I think this guy is basically cleared out. This is the problem with small cap stocks, that, they can have this sort of thing happen with one shareholder, etc. So I still like Carlisle a lot. Like here, I'm still holding it. Like I said, I picked away at it. Yeah, probably if it can get under 8 cents, I might pick away at it a bit more. So, okay, that's stock chart of the day for today. Carlisle starts a drill program. 3M has terrible earnings, showing that stock buybacks do not solve all problems. And so I hope you enjoyed that. And I'm going to have a fun one tomorrow. I was going to do one. I'm doing my Great Trader series tomorrow. I was going to do one on a friend of mine in the mining industry, but I'm going to defer that a few weeks, because in light of talking about China and what's going on in Asia recently, I got one of my favorite trading documentaries, which happened in 1998 in Australia during the Asian crisis or the Russian crisis. I want to show this. And this guy too, the guy who's in this documentary, is a personality that I think is the most similar to myself of anyone I've ever seen in the markets. So everybody take care.